Wrong area. That's okay.
All right, guys, just gonna give it one more minute to let people log on. Give it just another minute, we'll get started. Okie dokie. Let's get this going. I am Erin Andrews. I'm one of the owners of Straight Line. We are an accounting and business advisory firm, provide year-round accounting services and business support to small and mid-sized businesses locally and actually around the country. We're here today to talk about the updates to the PPP forgiveness and requirements, and we've posted a variety of webinars, and we have a lot saved. Either they've been emailed to you if you've attended our prior webinars, or also in our Straight Line Owners Business Survival Guide on Facebook. But we will continue educating on this and other topics in the future. So let's get going with this exciting stuff. Bear with me 1 minute. Amber, you see my screen?
Yes, ma'am. Wrong one, but there we go. Perfect.
Just Amber, just a heads up, I think you have the wrong microphone chosen because I could barely hear you when you said that. So, you know. All right. So this is about the PPP Flexibility Act. It was signed into law on June 5th. And it goes over a variety of changes and updates to the existing PPP forgiveness and loan to make it a little bit better for business owners. Unfortunately, some of the changes were agreed upon a little too late for some of the people that got it early on, the PPP loan early on, but we're going to go through what has been done. So housekeeping, as always, you can ask questions in Q&A. I actually go through and try to answer them, and Amber answers them throughout the webinar, take breaks during the polling and answer them. You can raise your hand at the end. We'll do a Q&A session, and you can raise your hand, we'll unmute you. We will have the slides and the PowerPoint presentation available, and we will email you. Again, check your spam or junk folder filters because ours tends to go there, and then join our Facebook group, Straight Lines Business Owners Survival Guide, to stay up to date on all this.
And that link, the chat is disabled, but the links are in there if you'd like to join the
Amber,
group.
we still can't hear you. Sorry. Again, this is not intended for legal advice, and you should not be used as such. If you have a question specific to your business, please be sure to reach out to your professional. We cannot answer questions really directly about your business, but we are happy to help you later on. Okay, so I'm just going to do a brief overview of the PPP program, the Paycheck Reduction Program. Original intent was to provide funding for 2 months of forgivable payroll expenses, assuming the borrower retains employees, maintains pay levels during the required time frame. It was sort of like a federal unemployment system through the employer directly, to provide funding for forgivable rent, utilities, and interest during that time, assuming the expenses do not exceed 25% of your total forgiveness. Obviously, some things have changed, but that's what it was originally intended to, is basically to keep people working, evidently not business owners, but their employees. I will have my snarky comments throughout, per usual. So, paycheck reduction. So forgivable expenses, payroll costs, salaries, health insurance, retirement. I'm going to go really, really quickly through some of this stuff because we've addressed it several times in other webinars. So if I'm rushing and this is your first time seeing a webinar, I normally don't rush through things, but we've addressed this stuff several times in the past, and there's other webinars saved, but I did want to go over it just for those people that may not be familiar. And I keep seeing questions on social media and other places still questioning what's included with the forgiveness and the allowable expenses. So, all right, so it's payroll costs, interest on real and personal property loans, so mortgage interest, rent or lease paid for real and personal property, even an auto lease is included, utility payments, gas, electric, water, trash, sewer, telephone, and internet. What is not included? Any compensation of employee whose principal residence is outside of the U.S. If you, any compensation of someone that makes over $100,000, that's just a cash compensation that does not include the benefits. So you exclude anything above 100 grand. And then if you use the Families First Coronavirus Act credit, that is not included. That is a different type of credit that they issued. One of the first bills that they issued when the coronavirus hit, which we do have a webinar. It's one of our first webinars saved if you want to watch that.
Erin, can you hear me?
Nope.
So everyone else can, so I think that it's something to do with your speakers.
Maybe I should turn the speaker up.
Yeah, I think that's the issue. And we did have a request for you to go a little bit slower if possible.
Okay, I'll go a little
bit.
Use
us guys, we're 45 minutes south of Boston, so we talk a little quick.
Really fast. And I apologize. I'm going really quickly here because this is really just a recap of the stuff we've spoken about a few times before. So I'll slow down. All right. So I gotta move my face because it's across the thing. All right. So the loan forgiveness, the earliest forgiveness application will be accepted 56 days after your PPP was dispersed. That's assuming you keep the 8-week period or you're qualified for the 8-week covered period. The SBA, US and Treasury Department released the 11-page forgiveness application on 5/15. Additional interim rules were posted on 5/22. A new Paycheck Protection Flexibility Act was passed and signed into law on 6/5, making it easier to obtain full forgiveness. Snaps. SBA is working to simplify the forgiveness application. They have not issued the revised forgiveness application. We are hoping they do it as soon as possible, as I think 13 of our clients already have hit the 8-week covered period just this week. So we'd like to have them apply for forgiveness as soon as possible. So hoping they come out with that soon. So the next 3 slides are going to go over the changes as with the 6/5 bill. So 75%, the 75% requirement on payroll costs was decreased to 60%. And there was some confusion after the bill was signed that there was a cliff, meaning that if you didn't spend at least 60%, then none of the funds would be forgiven. This is not true, and there is no cliff. Then there will be partial forgiveness if you spend less than 60% of the loan proceeds on payroll costs. I'm actually gonna have a couple examples on how that's gonna work later on. The covered period was extended from 8 to 24 weeks. This doesn't mean that if you have the 8-week loan and your 8-week period and you're done with it, that you have to, it automatically goes 24 weeks. That's not the case. You can elect if you got the loan prior to June 5th, but if you borrow the funds, if you do the PPP loan after June 5th, you are required to use a 24-week period. You are not allowed to use the 8-week period. But if you got the loan prior to June 5th, you can elect either or. And I will address this a little bit more, but there is no in between. So if you use the funds within 16 weeks, that doesn't mean that you have a 16-week period. It means you have the 24-week period. But I'll talk about that in a few minutes about how banks are addressing that to our knowledge. And then also about that too, let's say it's either 24 weeks or 12/31, whichever is later, or earlier, I apologize. Pushback, and they pushed back the June 30th deadline to rehire workers to December 31st, 2020 to restore your FTE count. We are still not clear if employers have to maintain the FTE count through the covered period, either the 8 or the 24 weeks, or it's just restored by 12/31. And we're also not sure if you elect to take the 24-week period as opposed to the 8-week period as opposed to 24-week period, if you can then elect the 12/31 restoration date for the employees, or you have to keep it at 6/30. We're not sure about that and how that's going to work. They haven't clarified that either. Additionally, employers can defer the employer portion of federal taxes for 2 years of the PPP. So right now, if you have the PPP loan and you're paying payroll, the amounts not forgivable are the employer portion of the federal payroll taxes, which is Social Security, Medicare, and federal unemployment tax. That is not forgivable. So prior to this bill, you were not allowed to defer that. There is an option to defer that tax if you did not take the PPP. Well, they changed that. If you took the PPP, you can defer that for 2 years. As you can see there, we are not recommending this for our clients personally, and just our firm's view is that you should pay the taxes as you incur them, because when they're due, they're going to be due, and you just might as well pay them. It's really going to screw up your payroll tax forms. I just imagine the notices they're going to go out. So we don't recommend that. I think in an extreme situation, if you cannot pay those employer payroll taxes, then you should really talk to your accountant or whomever about that. But we really don't recommend deferring taxes. It's just not a good idea, even though it is allowed. The forgiveness application, before you had to submit it within 60 days. Now it has to be submitted within 10 months after the end of the loan forgiveness period. I'll talk a little bit more about this after, but it's now 10 months. We have 10 months to submit it. And the extension of the loan terms or period from 2 to 5 years, this is not automatic. So if you received the loan prior to June 5th, you still have the 2-year period, and you have to go to your bank and try to negotiate extending it to a 5-year period. I will tell you, lenders are very, very reluctant to do that, and they actually pushed really, really hard with legislation not to extend it at all. So, however, if you got the loan post June 5th, then the automatic period is 5 years. So I even received an email from my bank, and they basically said your period's 2 years. That's it, because I received the loan prior to this. So people keep saying it's extended from 2 to 5 years. It is not an automatic extension if you received the funds prior to June 5th, but it is an automatic loan period if you received the funds after June 5th. So more additional changes. There was a new or additional exemption for forgiveness reduction due to a decrease in full-time employee for closures. I'll go over that. And then also the PPP loan, if you have not, or you know somebody, or you do not have the PPP loan yet, you only have until June 30th to apply for it. This was pushed by Mitt Romney. He really didn't want anybody getting these funds later on. There might be new funds available. So they just really wanted you to only apply for it through June 30th, and we don't expect that deadline to be extended at all. So if you know somebody that needs a PPP loan, this is actually a good time to get it anyways because of the new guidelines in place. However, they only have until June 30th to apply for it. So quickly, again, you'll hear my very fast speaking here because we've gone through this a lot, but the payroll costs include compensation to employees in the form of salary, wages, and commissions. And I want to just give a little disclaimer here. Owner employees are treated differently than their other employees, even though they're on payroll. But so this is really for the regular, just employees of the business for the most part. But anyways, so compensation to employees in the form of salary, wages, and commissions. So for vacation, parental, holiday, medical, or sick leave, there's allowance for separation dismissal. So if you have severance pay, and then also includes the payment for provision of employee benefits consisting of group health care covered, including insurance premiums and retirement match. So if you have a healthcare plan, dental, vision, those, and you pay that for the employee on their behalf, your portion of the cost is included, as well as your match for retirement. And then also included is payment of state and local taxes assessed on the compensation of employees. So in Massachusetts, that's state unemployment or Massachusetts unemployment tax. Other states have state unemployment tax as well. They have local taxes in other states. Also, if you're above 25 employees in your Massachusetts, the Mass PFML tax is included as well that you have to pay. And then for a sole proprietor or partner, net earnings from self-employment, again, covered later.
Just to clarify too on that insurance, we've had a lot of questions whether workers' comp, liability, those type of insurances are included, and they are not. Those are not forgivable expenses.
Thank you. And I could hear you because my volume was up.
Great.
All right. Continuing on, payments to furloughed employees during the covered period are eligible for forgiveness. Paycheck purposes for the statute enabling borrowers to continue paying their employees, even if the employees are not able to perform the day-to-day duties, whether due to lack of economic demand or public health considerations. So if you just paid people just because you had to spend the funds, they're included. Employees' hazard pay and bonuses are eligible for loan forgiveness because they constitute a supplement to salary or wages. So we always get questions about bonuses or hazard pay for like the healthcare industry. Maybe they are included. So I will say that if you are issuing bonuses out, just HR wise and compliance wise that end, you probably should make sure you're not being discriminatory and you have like legitimate reasons for doing bonuses. You can't just say, I really, really like you, so I'm giving you a bonus, but I don't really like you, so you're not really getting a bonus. You should be fair when you give them out. All right, so covered period for payroll costs. With the new changes as of June 5th, the covered period is either now 8 weeks or you can elect to extend it out to 24 weeks. Again, for those of you that received the PPP loan, sorry, Alexa just spoke to me. For those of you who received the PPP loan after 6/5, the covered period is automatically 24 weeks and there is no option to choose the 8-week period. We do not know why they did this. This is a good thing, but it's also kind of a detrimental thing because you will have to maintain payroll for 24 weeks. What if you can't maintain it? I'm not sure, but we could talk about the 24-week period in a little bit, about applying for forgiveness before the 24 weeks hits. So again, this is an either or covered period. There's nothing in between. Banks are telling us once your spending is done, you could file for forgiveness. So this is what I mean by, even though it's 24 weeks, what banks are telling us now is as soon as you've spent your funds and you've hit the FTE requirements, just submit your forgiveness application once they start accepting them after you've done the funds. I wouldn't recommend it for anybody that's an 8-week period, but I think it's for those people that have elected the 24-week period, and let's say you're on week 16 and you've spent all the funds. Contact your bank and see what they'll do. I think it would be a nightmare for them to wait administratively and process PPP forgiveness applications way down the line. I think they're just going to want to get it done. So choosing between the standard covered period and alternative covered period, it no longer matters. So this is because the extension was done so long. So, all right. Actually, I probably should see if there's any. So we're just going to do the first polling question, and I just need to get Zoom up. Bear with me 1 minute. Fine. Here we go. Just, if you guys don't mind just doing these quick polling questions, that'd be super. I will look to see Q&A.
Yeah, I did leave a couple questions in there that I thought would be best answered live.
All right, so one of the questions by Jason is, we applied for the PPP and did not include 2 owner salaries up to 100K. Can we apply more funds? My bank said no after he asked the SBA. I have heard differently after the updates. I cannot get an answer on this from anyone. Jason, I don't know the answer to that. I actually looked into that today myself, and I don't think you can, but I'm not positive, but I don't think you can. Missy Dunham, So if they close now, let employees go on unemployment, reopen later, as long as they use it within the 24 weeks, is this still okay?
Her original question was if she could split the weeks. So they've been working for 4 weeks and then they hopped off because they don't have any business, put them all on unemployment, and then they were going to bring them back later for another 4 weeks. I said that the 8-week period wouldn't work for that because that would be longer.
I think that's okay, Missy. I actually think some people are going to have to do that because, especially in Massachusetts, a lot of businesses are still closed for the most part. I don't see that'd be a problem. Just because you have the funds doesn't mean that you shouldn't use it. Okay, the polling questions.
Jason, I'm going to look into, we do have one client that somehow was able to get 2 sets of funding. I'm not sure what the stipulations were behind that. So I'm going to.
They had something back in May. They gave like a 1-week window that you could reapply if your application was wrong and get more funds. It was 1 week and it expired in May. Okay. So I'm going to end the polling. Share the results. It says, is your business taking advantage of the 24-week extension? 11 said they're going to do 24%, 11% I should say. 30% said yes, but the funds will be spent less than 24 weeks. I think that's going to be the majority of the situation for most people. 4% said 8-week period is fine. 22% unfortunately said no due to funds already being spent. 33% unsure. Okay. M. Fredrickson asked if we can talk about paying yourself on payroll as the owner or sole proprietor. I can really quickly. This is actually a tax compliance issue. If you are an owner of a sole proprietor, a single member LLC, DBA, whatever you want to call it, you are not supposed to be taking payroll as an owner. It's against tax compliance rules. The only way you should be taking payroll as an owner of a business if you're an S Corp or a C Corp. So I've actually spoken to people that have put themselves on payroll for this, that file a Schedule C or a partnership, a 1065 or something like that, and they weren't actually supposed to. Technically, you're supposed to go back and amend those returns, pay back the taxes, get your refunds, all that fun stuff. So you shouldn't be doing that. You just take draws in that position. You just write a check to yourself and just say, M. Fredrickson, owner pay, quote unquote. All right, I'm gonna keep going. All right, so payroll costs paid or incurred. So if you're electing the 8-week period, this really isn't a big deal to you, but I just wanted to touch on it. In general, payroll costs paid and incurred during an 8-week or 56 days or 24-week period are eligible for forgiveness. This means that you can include the check date that is paid in the beginning of your covered period, even if this check date's covers a period prior to your cover period. You also get to include the days in your covered period at the end of your period that are incurred but not yet paid before your 8 or 24-week lapse. I will explain that in the next slide. These days are included only if paid on your next regular scheduled check date. So you can't change the payroll check date just for fun, just to get something in. So the definition of this, so I talk about this in other webinars, cash and accrual type of accounting. So whenever you run payroll, you never really think about the pay period. The pay period is the period in which your employees worked, okay? The check date is usually what payroll goes by. So as an example, the first check in a new year, let's say it's January 3rd, usually covers the prior year. That's the pay period, but you count the check January 3rd. You don't, and it doesn't matter that those wages were incurred during December, they were paid in January, so it's a January payroll check. Same thing here. So payroll costs are considered paid on the day the paychecks are distributed or the borrower originates the ACH credit transaction. So what it's doing, the paid and incurred, it also says that payroll costs are generally incurred on the day employees' pay is earned, so that pay period time, okay? So what this saying is you can do that if your first check, if you got the funds on June 15th and your check date was on June 15th, for a prior period, you can count that. And then let's say your covered period is over July, I'm totally pulling numbers out right now, July 31st, that your covered period end and your check date is August 7th, then you can write a check on August 7th that would include the wages, the pay period earned through July 31st, and it is included in your amount. So this is really good for the people that have the 8-week period, because in some cases, it actually allows them to have about 10 or 11 weeks of payroll depending on their pay cycle. All right. And that's not new. That was new that's been all along. So it's just really defined the last bill or whatever you call it, IFRs. All right, so calculating owner's payroll costs. I'm going to touch on this quickly because they didn't really talk about owners at all in the most recent bill. Why would they? Owner employees and self-employed individual limits. So if you are on a Schedule C, you're a little bit different than this. This is about S Corps and C Corps. Sort of the amount of loan forgiveness requested for owner employees and self-employed individuals payroll compensation can be no more than the lesser of 8 weeks out of 52 of 2019 compensation, or $15,385 per individual in total across all businesses. So what this means is for S Corps and C Corps, if you're on payroll as an owner, you look at what your 2019 your gross wages, not your draws, not your K1 income. It's just the wages paid. You divide that by 52 and multiply by 8, and that's the max you're allowed to pay yourself during the covered period. If it's for 24 weeks, they haven't actually expressly said that it can be the 40. I have the notes. It's like 46,154. We're assuming it is, but we don't know. They didn't address it. We're waiting for the application to come out. And that also includes your employer match on retirement. So if you have a safe harbor plan, and also healthcare contributions, self-employed health insurance, you cannot be forgiven more than that amount that was paid in 2019. This was, my opinion, pretty shitty on the legislature's part, because a lot of owners used this to pay themselves because they didn't go on unemployment. And now either they overpaid themselves as they got the loan prior to these IFRs being released. And also, if you have two businesses and you have two PPP loans, you can have a total of $15,385, or maybe when for the 24 weeks, $46,154 by two businesses. So you can't basically double dip, quote unquote, in both businesses. And you can't also, we were doing was taking the like profit sharing amounts for retirement and using that to get payroll numbers up, but they're not allowed to do that anymore. So I personally think that they screwed over business owners, but what do I? It doesn't matter, in my opinion. And so again, we don't know if it's going to be extended 24 weeks of $100,000 annualized, which would work out to $46,154. We just don't know yet because they have not addressed it. Okay, self-employed individual limits. They didn't discuss this in the bill, but I'm just putting this in here. So, because why would they discuss self-employed people? It's a Schedule C, a single member LLC, general partners for a 1065. They're capped at the amount of their owner compensation replacement, calculated in 2019 net profits, whatever your net income was on line 31, and divided by 52, multiplied by 8. So general partners, very similar, how that's done. And then no additional forgiveness is provided for retirement or health insurance contributions for self-employed individuals, including Schedule C filers, general partners, as such expenses are paid out of their net self-employment income. You should actually read the IFRs directly. It's kind of insulting what they say about self-employed people. I told you I would have my little snarky comments. All right, eligible non-payroll costs. Businesses must be business related and in existence on or before 2/15/20. So it's interest, not principal on mortgage, real or personal property, rent on real or personal property, office, storage, equipment leases, auto leases, utility bills. For self-employed people, auto gas is included, as long as there are some caveats in that, however, which I did go over in the webinar we did on June 2nd, that you had to have taken the expense on your 2019 Schedule C, or you could not have it as forgivable for this, which makes no sense, but that's okay. I'll just go through this, and I wanted to address something about the owners again. These cannot be more than 25% of the total forgivable debt. One thing I did want to say about self-employed, about owners, is that when you apply for the PPP loan and you are a new business, it asks, if you're a new business, you get to put in the information using 2020 numbers. According to the PPP forgiveness application, businesses that started after January 1st, 2020, owners cannot be part of the forgiveness at all. So they just left out owners entirely if you started your business after 1/1/20. That also goes for so let's say you had a DBA or a single member LLC in 2019, you elected S Corp status and started paying yourself, you're gonna have to just try to figure that out with the bank on how they're gonna consider you as forgivable. Wages, draws, I don't know. They did not address it at all. And I think they were not very kind to business owners. The other ones were the ones keeping the business alive. So non-payroll costs are eligible for forgiveness if they were paid during the covered period, incurred during the covered period, and paid on or before the next regular billing date, even if the billing date is after the covered period. Subject to the overall limitation of the 40% of the amount forgiven. So they have to be paid during the time or incurred during the time period. Okay, I'll give an example in a minute, but I did want to say this: when you sign your PPP loan, you also ensure that you are not using the funds for anything other than the allowable expenses, including payroll and non-payroll costs, and anything about you use the funds for anything else is considered fraud. That's not good. Bank fraud. So non-payroll cost examples: borrower's covered period runs from June 1st to July 26th. The borrower pays its May and June electricity bill during the covered period and pays its July electricity bill on August 10th, which is the regular billing date. The borrower may seek loan forgiveness for its May and June electricity bills because they were paid during the covered period. In addition, the borrower may seek loan forgiveness for the portion of its July electricity bill through July 26th at the end of the covered period because it was incurred during the covered period and paid in the next regular billing date. I don't know how the electric company is going to break that out for you, but I guess you just prorate it, divided by how many days there were, and multiply by those days. So again, if you're using the 24-week period, this really isn't an issue for you. It's mainly the people that are doing the 8-week covered period.
Erin, we did have a question in there about rent. So someone's wanted to pay their rent basically on the 30th, but their loan ends on the 30th. That would be paying for July's rent. So that would mean that 3 months of rent were included in that 8-week period. I know we had been conservative before and saying only 2 months you should include for rent, but what are your thoughts now with the new rules?
I think that's prepaying rent and it's going to be disqualified.
That's what I think too. Okay. I just wanted to clarify that for you. Who was that on here?
I don't think you can prepay expenses.
Michelle, so the answer I gave you was.
You can always try it. You can always try it. All right. Okay, forgiveness overview. So the forgiveness is up to the full amount of the loan plus accrued interest through approval of the forgiveness application. So, and are eligible for forgiveness. So you are potentially eligible for 100% forgiveness. Cannot have forgiveness of qualified costs in excess of loan amount, obviously. And forgiveness application is filed with the lender directly, not the SBA. So the SBA has provided Form 3508, and just like the forgiveness PPP application, we do expect banks to adopt their own versions. Applications can be filed after day 56, but no later than 10 months after the end of the borrower's covered period. So you do have 10 months now to apply for it. So after day 56 or the 24th week, whatever period you choose. But after that, after the 10 months, you're not getting forgiveness. The lender has 90 days to make a determination. And if the lender denies forgiveness, the borrower can appeal to the SBA. All right, so one of the new rules is that they reduced the 75% to the 60% payroll cost requirement. The new law reads at least 60% of the loan proceeds must be spent on eligible payroll costs. As it is written as a cliff. This was fixed in the IFR released on 6/11, meaning a cliff is if you don't spend at least 60% of your funds on payroll costs, and they were just saying you get no forgiveness. This is not the case. It will be a phased, a partial forgiveness. So they did clarify that. And then this means that up to 40% can be spent on eligible non-payroll costs, which is a good thing. Okay. Reductions to forgiveness. CARES Act specifically requires certain reductions in a borrower's loan forgiveness based on reductions in full-time equivalent employees, reductions in employee salary, so total annual salary and wages, average wage rate during the covered period for employees earning less than $100,000, reduction due to payroll costs not meeting at least 60% of total spent, and EIDL grant reduces forgiveness as well. So this is how you can reduce your forgiveness, and I'm going to go through them. So there's a couple people asking questions if they got the funds before 6/5, is there anything special they have to do with their bank to elect the 24-week period versus the 8-week period? To our knowledge, there is not. You may want to just shoot an email to your lender and just say, hey, if you have an email, if you have a small bank, obviously if you have Bank of America or something like that, you're probably not going to get through to anybody. But you might just say, hey, I'm going to do the 24-week period. But as we know right now, there is no formal election to make. You just do it. You just say, I'm going to do 24 weeks, and you just go with it. I don't know if that will change. I'm not sure, but I don't think they want to process any more paperwork than they have to. Okay, so I'm going to give you 2 examples, okay, on reducing expenses, reducing the forgiveness. These are basically just assuming that you have no reduction in FTE and full-time equivalents. So it's just not spending enough money to reach the 60%. So borrower receives a $100,000 PPP loan, and during the covered period, they only spend $54,000 or 54% of its loan on payroll costs. Then because the borrower used less than 60% of its loan on payroll costs, the maximum amount of loan forgiveness the borrower may receive is $90,000, with $50,000 in payroll costs and $36,000 in non-payroll costs, constituting 40% of the forgiveness amount. Now I know you're probably confused, so I'm gonna show you. I actually do a calculation in the next example. But what this is saying is that if you spend less than 60%, so 54% on payroll costs, then your non-payroll cost expenses are also reduced by the same percentage that reduces your payroll cost expense. Does that, so in this example, you only spent 54%, okay, on payroll costs. That means your original allowable non-payroll cost expense was $40,000, but you actually have to reduce how much you have allowable for non-payroll costs by that same percentage. So that brings it on $36,000 in non-payroll costs. I'm going to show you the example. I was trying to do it so you can actually see it. So this is a different example because I wanted to use I don't like using just the $100,000 because I think it can be kind of confusing. I want to use something a little bit different. So let's say you've got an $80,000 PPP loan. And again, I don't think this could be an issue for people that have the 24 weeks, but I just wanted, in case there's people that don't have it. If you spent all the funds correctly and you have no FTE reductions, the allocation for cost should be $48,000 on payroll costs and $32,000 on non-payroll costs. However, what you did was you only spent $40,000 on payroll costs during the cover period. This is only 50% of the PPP loan amount, which is a 16.67% reduction. Okay, so originally you were supposed to be able to spend $32,000 on non-payroll costs. You can still spend the amount of money on $30,000 on non-payroll costs, but only you have to reduce that $32,000 by 16.67% because the payroll costs were reduced by 16.67%. So now you're reducing the non-payroll costs by 16.67% for the forgivable amount, and now you're only forgivable non-payroll cost is $26,665.60. So that's $32,000 minus the $5,334. And then the total forgivable amount will be $66,665.60. That's actually 16.67% less than $80,000, or the $26,000 plus the $40,000. I know that's confusing. I understand it, which is why we don't recommend people do this on their own. But that's just assuming, again, you have no reduction in wages for employees, you have no FTE. This is just straight payroll. You just did not meet it. So there's other reductions, but this is just the most basic example I could give. And yeah, okay. All right, so some more wage reductions. Chapter 1106 of the statute makes 2 adjustments. One of these is the pay rate reduction. So the formula adjusts the initial eligible for forgiveness amount for any reductions in employee wages in excess of 25%. So what that means is if you pay somebody 26% of what they were making before, then you're fine. There's no reduction in wages. If you paid someone 24% of what they were making before, then there is a reduction in wages by that dollar amount of whatever that 1% is. That's what you reduce the forgiveness by. So reductions in employee salary, reduction in employee wages, all during the covered period. Again, it's confusing and not an easy calculation. That's how it is.
Someone asked earlier what any downfall would be to using the 24 weeks as opposed to the 8. And this is kind of what I was trying to explain, is that if you aren't able to actually keep these people on for that 24-week period and keep them at that over 25% of their wages, that could bite you in the butt.
Yeah, because you might get a loan that, was too much for 8 weeks, but way more, you know, not nearly enough for 24 weeks, like, what are you gonna do? I don't know. Like, you kind of come up with the funds and you're not open fully. So that's also why I think banks will just accept applications earlier once you hit it all. That's why I think you should just try. But I don't know, because you're gonna have to have the FTE count up and all that stuff. So that is a downside to that. I'm just reading the thing. Okay. So does ignore, so the wage reduction does ignore any pay rate reductions for employees who earn more than $100,000. So if someone was making 120 and you reduce their pay down to 105, that's fine. That doesn't hurt you. For anybody else, a wage reduction in excess of 25% further reduces the amount available for forgiveness. Again, this is just cash compensation, so this does not include benefits. So if you stop paying for their health insurance and stuff like that, or that, you know, their benefits, that doesn't include, it's just their wages. So it is a dollar for dollar reduction in forgiveness. Example, again, if you reduce it 24%, the dollar for dollar is in between that 1%, whatever that amount equals out to. And then the comparison period that you're looking at for the reduction to see if it was reduced is between 1/1/20 to 3/30/120. I don't know if it depends on your pay period, how many pay periods you had during that time. You divide that by how many full-time hours there would be, you know, or the wages it would be, and then you compare it to the weekly average during your covered period. Okay. Wage reduction clarification. The IFR issued on 5/22 clarified that a reduction in wages attributable to reduction in hours does not count as a pay reduction. So if you're still paying a person the same amount of money, but they're just working less, that does not count as a pay rate reduction. It might count against you for the FTE count because their hours might be lower, but it won't count against the reduction because you didn't actually reduce their pay, you reduced the amount that they're working. If you reduce an employee's hours, that does not count against you twice. Like I just said, it will count against you as the FTE calculation, but not against the salary rate, just exactly what I just said. The reduction penalizes you if you reduces someone's salary or their pay rate only. Okay. All right. A safe harbor. If the average annual salary or average hourly wage was reduced in the period from February 15th to April 26th as compared to 2/15, and you restored salary or hourly wage levels by 6/30 or 12/30/120 for that employee, there is no reduction to forgiveness. Okay, but if the wage was reduced after 4/26 and then restored by 6/30 or 12/31, you still have the reduction to forgiveness. So we think this is a problem as currently written because there's several states that were not open at all, actually went under stricter closures or guidelines, I guess, I don't know, after April 26th. So, okay, we're just doing one more polling question. We don't have a lot today. Just want to move along with this.
We have some really good questions in the Q&A.
Okay, well, I'll get them. Okay. So the polling question is, are you on target to hit full forgiveness, keeping in mind your current 60-40 split, full-time equivalent count of applicable expenses? All right, let me see the Q&A. If you have met FTE requirements at the time of your application for forgiveness, but then have to reduce, re-furlough during the approval process, is that a problem? I don't know. You have to probably, I don't know.
One of the biggest questions, that and the owner's comp, is the two questions that we don't have clarity on yet.
Okay, Frank is asking, still not quite clear on the penalty of not keeping employees. Sorry, when someone removes a question, it moves the whole thing. Still not quite clear on the penalty of not keeping employees if we elect to use the 24-week time period. We will obviously use up the loan for salaries much sooner, but we have to keep the same amount of FTE through the 24 weeks. We believe so, but we're not clear. Again, I was on with my little accounting gang and we still are not clear on this. I'm sorry, Frank. I wish I knew. Michelle, if the pay rate drops but then goes back up before the end of the 8 weeks, how does that affect us? You take the average of what was paid before compared with the average that was paid then. If you do have a reduction, then I think it's just the cumulative average of your covered period compared to the cumulative average of the look back period, and just see where that stands. But if the average goes down, then I believe you're going to be reduced on forgiveness.
As an idea, do you think that that could be kind of filled up with some sort of bonus or overtime wages of some sort, not for the hours, but for the actual pay, since they're averaging it out over the period?
Yeah, for the 8 week, for the 24 week people, I don't think people have that money to do the bonuses though. Okay, how does it work if you only have hourly employees that left in the month of May and you not replace them until mid-June? Joel, I'm going to go over some of the exemptions that might cover your questions. That they have some exemptions from the FTE count after this that might answer those questions. And Debbie asks, do you have to maintain both FTE and not reduce wages by 25%? Yes. All right, I think we end polling. All right, so 47% of you are good. I think you'll be fine with the 60-40. 33% say they need to make adjustments. 0% say no planning. 0% said no choice, will not receive full forgiveness. And then 20% are unsure. Okay, moving on. Thank you for answering. All right, the second reduction to forgiveness under Chapter 1106 of the statute is the headcount reduction. The total amount eligible for forgiveness is multiplied by a fraction. So when you filled out your PPP loan application, which by the way, they have issued a new PPP application, for the actual loan itself. But when you did it, you were able to choose your FTE count to these look back periods. And there's also a seasonal look back period, which most people didn't choose. And what we did with our clients, we took the lesser of the look back periods. So you want to make sure that you're comparing that your FTE count that you have during the covered period and or 630 or 1231, you're comparing it to the look back, one of these look back periods. FTEs are calculated by dividing average number of hours by 40. Alternative method, use 1 for 40 or more hours, 0.5 for less than 40. I personally don't think you should use 0.5 for less than 40, because what if you have someone that works 15 hours a week? That's not 0.5. So what we did for our clients is during those look back periods, we manually counted how many pay periods were during that period, added up all the hours. By the way, you do not include overtime hours paid. You only include, but you do include vacation, holiday, all that. So we add up all those hours, and then we figured out how many pay periods there were. So if it was weekly, it was pay periods times 40. If it was biweekly, it was pay periods times 80. And then we took the total hours paid divided by the number of the total hours for all those pay periods. And that gave us the employee count. You will calculate FTE multiple times. Baseline, you can do those periods again. A lot of people, like for example, we have a lot of seasonal clients. Obviously, we have a lot of trades, contractors, landscapers. So we chose the January 1st, 2020 through February 29th, 2020, because their FTE count was so low. Restaurants, this would be good for. So you still have the option to choose the lower of. Just because whatever you put in the application doesn't mean it's stuck with that, as far as I know. You still have the option to choose. So some people said, well, I had nobody on payroll because I am a seasonal employer. Great. And you really don't have much to worry about. Then you're how many people you pay during the period, then you're fine. We just went over this again. And again, you can choose 630 or 1231, but we're not sure if you are an 8-week period, if you're allowed to choose the 1231 deadline. We're not sure and how you'd even do that either. So maybe that's why they did a 10-month while you apply for forgiveness, because it gives you time to restore employees by 1231. Maybe that's why they did that. That actually makes kind of somewhat sense, but hopefully they'll clarify that soon. So here are the exemptions. The first two came out with the IFRs a few weeks ago in very late May. And then the third one is what came out with this most recent bill. So this is what will get you at, reduce your FTE count and not penalize you for it. So the borrower may exclude any reduction in full-time equivalent employee headcount that is attributable to an individual employee if the borrower made a good faith written offer to rehire during the covered period, or the alternative covered period if the offer was for the same salary or wages and same number of hours as the last pay period. The offer was rejected by such employee. The borrower has maintained records documenting the offer and its rejection, or the borrower informed the applicable state unemployment insurance office of the rejected offer within 30 days of the rejected offer. So if you tried to hire somebody back and they just said, nope, I like unemployment, bye-bye, you had to have it in writing. You have to record that it was rejected. So what I would do if it was a text or a phone call, I would write an email back to the employee or a letter and say, this just confirms that you rejected my offer of employment to come back to work. And then you must inform your unemployment office. You have to. That's part of it. You have to inform your unemployment office that you offer them a job, or that person will not be exempt from your FTE count. The next one is the borrower may exclude any reduction in full-time equivalent employee headcount that is attributable to an individual employee if the employee was fired for cause, the employee voluntarily resigns, the employee voluntarily requests a reduced schedule during the covered period or the alternative covered period. The borrower may count such employee at the same full-time equivalency level as before the FTE reduction when calculating the FTE employee reduction penalty. So if you had someone quit and give their notice, then it's okay. They don't count against you. Or you fire them for cause, you need to talk to your attorney about what's considered cause and what they'll actually accept for cause.
If you are in Massachusetts, you can report if you do offer them their job back and they don't want to take it and they, written notice say no, you can report that right online.
Yes. So the third one, which just came out on June 5th, this is for the businesses that could not open due to COVID. You're still closed, you are a restaurant and you are only allowed half capacity or just outside. So the borrower may exclude any reduction of full-time equivalent employee headcount that is attributable to an individual the business cannot rehire due to the business not be able to restore to full operating levels due to COVID-19 related operating restrictions. Businesses cannot find qualified employees to fill positions. So this was just written in. It was for those businesses that are like, what the heck? I can't even open my business, or I can open my business and it's severely reduced capacity, whatnot. How can I hire people back? So this is where this helps those businesses out. Thank God they added that. All right. If the average FTE was reduced in the period of February 15th through April 26th as compared to 2/15, and you restored salary or hourly wage levels by 6/30 or 12/31 for that employee, there is no reduction to forgiveness. But if the FTE was reduced, I think I already had this slide, I apologize, but it's good to go over it anyways. But if the FTE was reduced after 4/26 and then restored by 6/30 or 12/31, you still have a reduction to forgiveness. I definitely had this slide already, but it doesn't hurt to go over it again. So again, we do believe there's a problem with this because a lot of people did have to reduce employees during that time. I just really like that slide. So how to achieve maximum loan forgiveness. This has been in the last two presentations I've had, but planning, you'll need to project how your funds will be used on authorized expenses. You should constantly review the spending plan and compare to actual to ensure you meet the goals set forth. You have to document everything really, really well. Your bank will probably provide you with a full documentation letter, base list. It's basically bank statements, copies of checks, copies of leases, your firstborn son, whatever you want to do. And then keep records, your bookkeeping, all that must be very, very clear. And that will be submitted to the bank during the forgiveness process. So how to apply for loan forgiveness. Again, I just said all this stuff. Also payroll tax returns can be very important, obviously. Your mortgage payments, any utility payments, invoices, what now and what not. And many banks have been sending out SBA forgiveness application, and some created their own worksheets for you to complete. As far as I know, a lot of banks aren't even accepting forgiveness applications yet, especially since the final application has not been provided. But just be prepared to give a lot of information. And just like all the other things, the applications and things we have to submit, they say it's going to be super fast and easy, and it'll take 3 to 10 minutes. Nothing is super fast and easy when it comes to tax legislation. Please don't let anybody tell you that. That's not a thing. So yeah, maybe actually hitting send through the bank portal or something like that, it might be super fast and easy, but all the stuff you have to do ahead of time to get all that information will not be super fast and easy. It's going to be a lot of information gathering and documentation. All right, keep going. All right, so that was basically a lot of the forgiveness stuff again. So one of the issues which I talked about earlier, which part of the 6.5 is that the employer can opt to defer their federal payroll taxes that are the employer's responsibility, that is not included with the PPP forgiveness. Here are the deferral dates. 50% will be due 12/31/21. 50% will do 12/31/22. Again, we do not recommend this option. We do not think it's a good idea to defer anything, especially taxes. I can imagine the nightmare with the payroll tax forms and the notices. I mean, we have a special webinar for us alone, a training program on how to even prepare and file just a special 941s that are being, set up for all this stuff. And I just can't imagine. Just don't defer payroll taxes if possible, but it is an option if you absolutely have to, or you think it's a good idea for your company. But if you just pay it, please, if you can. The other thing is loan terms were changed. Again, all loans issued June 5th and after will be automatic 5-year notes. Any previously issued loans are still two-year notes, but can be converted to 5-year with bank approval. Again, I received an email from my bank, and they were basically like, yeah, we're not going to do that. And I think you're going to have to go through it. You're going to have to really push to get the 5-year note, assuming anything that's not forgiven you want to pay. So the date that matters, so let's say you applied or you received the funds really, really close to June 5th. The date that matters is the date your loan was assigned an SBA loan number, not the date of the loan document or the funding date, which is funny because your covered period starts the date that you get the funding dates. But once you're issued a loan a loan number, you actually have 10 days to approve, that you want to get the loan. So they're sort of just saying, just kidding in a way, but they're not. So if you're on around that 6/5 date that you got your funds, you need to check with your bank when your loan number was actually issued, because if it was issued prior to 6/5, but you got the funds on 6/6, let's say, then you're going to actually fall under the quote unquote old rules. But if you got the loan number on 6/6 and you got the funds on 6/6, then you're with the new rules. Again, word on the street is that most banks are probably not going to be granting this extension. Again, they really, really push the legislation to not have this automatic extension, because I guess it's a nightmare administratively. And then here is something that has changed a bit. So if you submit your loan application within 10 months after the end of your loan forgiveness covered period, you will not have to make any payments of principal or interest on your loan before the date on which the SBA remits the loan forgiveness amount on your loan to your lender, or notifies your lender that no loan forgiveness is allowed. So what this means is, let's say you wait until month 10 to submit in your forgiveness application. Technically, you don't even have to, they have 90 days to approve it. You don't even have to technically start paying on your loan until, was that 13 months out at this point? However, on the loan documents that you signed, it says payments have to start on month 7. So I have no idea how they're going to work on that. But according to this, you don't actually just start making payments until your loan application is approved or denied. That's going to be fun. So what if you don't get forgiveness? There's a very real possibility that you may not meet qualifications to receive 100% forgiveness. Any amount not forgiven will remain at a loan at 2 years, 1% interest. Oh, I apologize, it's pending legislation. Pending legislation, it's 5-year term. We just discussed it if you're prior. Again, payments start in the 7th month after the loan dispersed date or after you hear back from your bank on forgiveness application, whichever is later. But like I said, if you wait until 8 or 9, 10 months after your covered period, I'm not sure what the bank will do. So you have to talk to your bank about that. And then you may pay any amount not forgiven back at any time with no penalty. So there's no prepayment penalty. So if you have the funds just set aside, you can just pay it even before your loan forgiveness application is submitted. And the loan, I apologize, I should have taken a loan, give you refinance EIDL loan. We don't know that. So this has been one of the questions about the EIDL advance/grant. If that's going to reduce the amount of forgiveness, it is. That's always been a thing. That's never changed. But people get confused about it, so we wanted to address it again. If you received an EIDL loan/grant, grant/advance, the amount of that grant will further reduce your forgiveness amount. So if you received a $100,000 PPP loan, only $80,000 is forgivable. Then you actually, and you got a $10,000 EIDL advance grant, then you actually only have $70,000 forgivable. Okay, it's not 90,000, it's 70,000 because you only had 80,000 qualified for forgiveness. You reduced the amount for the EIDL advance grant by the 10K, and now you're at 70,000. And this remaining amount will be payable under the terms of the PPP loan document. What we did for our clients, because obviously people didn't receive them within 3 days after they applied for them. If the client doesn't need it, we just stuck it in an account and we didn't use it, or we recommended that. If they don't need it, they stuck it in an account, and so that it's just ready to pay back as soon as they start paying back the loan. If you do need it, then it's just going to be part of your PPP loan amount.
Just to be super clear, that is only the advance grant that you received, not the full. If you qualified for a full loan, the actual loan itself doesn't take away from PPP forgiveness. It's just that $1,000 per employee up to $10,000.
Thank you. So there's still no deduction for the PPP expenses. So again, the loan itself, the forgiveness part is not taxable. However, they also made the expenses non-deductible. So this is the reason why your books have to be super, super clean. You have to categorize them really properly when you do tax planning and tax preparation, making sure you do not include those expenses as expenses, determining your taxable income. The other thing is, what someone brought up today in a webinar we watched is that, let's say you go through all the way through the 1231 and you apply for forgiveness 10 months after, we will have no idea what's actually forgivable. So we don't know how to even do tax planning, because we won't know what's actually qualified for forgiveness. So next year will be fun for those that find out after. But I guess to be conservative, you just assume it's all forgivable. I guess pay taxes, pay in taxes based on that, estimated taxes. And then if you get a refund or overpayment, it's better than knowing, I guess. I don't really know, maybe not. So I don't expect it to change, to be honest. They didn't even address it in the most recent bill, this one on June 5th, but it is not deductible. That's why your books have to be really, really clean. So what we do not know, if the borrower restores FTE's payroll by June 30th, how long do they keep them on payroll to maintain the forgiveness exemption? Or is it by 12/31? Or is it the whole time between 6/30 and 12/31? Or is it during the covered period and then not? Like we said, we really, really don't know about restoring these FTEs. This has actually been our question before they even changed the 12/31 deadline. We just had our clients make sure they had the FTE count during the 8-week covered period and by June 30th. So unfortunately, we just don't know the answer to this. Also, family attribution rules for payroll. So we don't know. Family attribution is basically an arm's length. If I'm an owner of a company but my husband is not, technically he's an owner too under attribution rules. So we don't know if these are going to count. So let's say you put your spouse on payroll and they're not an owner of your business, but you put her on payroll to get the payroll numbers up. We don't know if they're going to be considered owner employees or not. We don't think so. They haven't addressed it at all, but let's see what comes out on the new PPP forgiveness application, shall we? And then related party rules when it comes to real estate. Are there limitations when an owner is renting to themselves? We don't think so, but they love to surprise us. So if we're using rent to pay as one of your expenses, basically what we're just making sure people have is established leases and established payment history prior to 2/15 so that we can justify the rent payments, because a lot of owners, you know, for S corps, or they pay themselves rent. So I'm just reading the questions. But if it's forgiven by 7/31, will they come back and see what happened between 7/31 and 12/31? Michelle, I have no idea what they'll do. I have a feeling the banks are just going to want to get these done and over with as soon as humanly possible and not care. My opinion. That's why I also think that, let's say you don't do the 8-week period, you choose a 24-week period, but you're done on week 15. Just see what your bank says and try to submit the forgiveness application and see what happens. That's my opinion of it. I could be wrong. So that's pretty much it. We're here to help. We've been helping I don't know, several dozen, I don't know how many, over 40 clients with the PPP assistance. Maybe more than that. We've done several consult calls. If you have had a consult call with us once already and you have more questions, we will ask you to sign an engagement letter to retain us for some work. We love giving information, but unfortunately our time is very limited and we can't keep doing free consult calls over, you know, more than one time, but we do love helping people, and that's why we're doing the webinars. And then we will do a next webinar when we get I didn't mean to say new bill, I meant the final application, just a really quick one to discuss the changes. So email us if you have questions, concerns.
Once again, the best way to stay up to date, with the exception of doing all this research yourself, to stay up to date with us is to follow our social media pages and join that Facebook group. After this is all over, we're hoping to continue to help everybody figure out a way to never put you guys in this position ever again, so that you won't be, you know, struggling if anything ever happens. So join up on there so that we can keep providing information and helping out.
Yeah, what she means by that is just that you're not in a position where you have no money and you can't last, your business can't make it through a few months without, you know, money coming in, or personally as well. So we're working on some new education platforms. If you have some ideas of educations or other webinars you'd like us to host, basically anything business, please let us know. We're going to be developing a whole straight line university coming soon. All sorts of topics, which is super fun. Okay. Any other questions?
If you do have any questions right now, feel free to raise your hand. I'm happy to chat.
Thank you, Frank. Oh, look how fast we did that one. My fast speaking pays off.
No, you slowed down.
I did. And also, like, if you guys would rather us do live Q&A sessions, like on our Facebook page or something like that, we could do that as well. We were going to, and we just, honestly, we were so slammed with the work and actually staying on top of compliance, we weren't able to do the Q&A that we wanted to. But now that things have, you know, quote unquote, slowed down a bit, we want to be here as a resource to help for whatever we can. So if you guys have some feedback about that kind of stuff, that would be fantastico. Okay, well, it doesn't look like we have any questions. Again, this will be sent out by email, so just check your email, make sure we're not in spam. Be on the lookout for other emails about other webinars we're going to be doing. We'll send the slides as well as the actual webinar itself. And, oh, the EIDL loan, Serena. We will, as soon as they update guidance on the EIDL. I think that they were just trying to hammer through this, and then EIDL loans will be next. I also want to talk about some of the tax credits that are out there. Actually, have some notes on, I don't know where my notes are, but there's some other tax credits that are available that we'd like to do. So the EIDL loan is actually very limited, and it was intended for people that like are in a hurricane economic injury disaster. So the webinar we watched today, he's a contributor to Forbes magazine, writes a lot of the articles. He was basically saying, if you have the funds and you really weren't hit horribly you should give it back, but I think people should hold on to them and wait to see what happens with the guidance on the EIDL loans themselves.
And those did reopen this week.
Oh yeah, June 15th. Yeah, what is today? The 16th? You can actually go and apply for the EIDL advance too, Amber?
Yes, yes ma'am.
Advance grant and the loan. So I don't know if it looks different than it did before. I haven't had a chance to take a look at it.
It's not, it is exactly the same.
Okay, so if you still want to get the advance, let's say you didn't qualify for the PPP or just wasn't a good move for you, go try to get the advance grant. Just to let you know, the question to ask how many employees in your business, they don't actually, they changed apparently the definition of employee, because an employee is technically someone that has W-2, but if you're a sole proprietor, it's just you and maybe your wife. You can put 2 employees down or just 1, but don't put 0 if you don't technically have employees, because that's what they're counting it as. All right. Yes, the EIDL loan stuff will be hopefully answered soon, but who knows when they're going to talk about that stuff. I do personally still think that if you qualify for an EIDL loan, you should go get it and then just let it sit in an account, because it's 30 years, 3.75, no payments for 12 months. Interest will accrue during those 12 months, but I think they're going to change the terms on them, you know, based on what you can use the funds for. And it's really, really hard to get this financing for small businesses, especially commercial. And that's a super low interest rate, good terms. And who knows what the future is going to hold for businesses. So it probably doesn't hurt to have some cash on hand. My opinion on that. It's not legal advice. Could be totally wrong. But all right. Well, I think we're good. Thank you so much for attending. Please share our webinars and anything else you can on Facebook or email, social media, whatever. Thanks again for coming. Have a wonderful week.